Welcome to Biztech's Property Show. Hi, I'm Brian Fernandez, and today we're going to take a look at Singapore's commercial and retail real estate markets, what's driving them, and what's the outlook like moving forward in the second half of 2024. Now, to bring an expert lens to the conversation, we've got Edith Tay. She's the Executive Director and founder of PropertyBank, which is based in Singapore. Now, PropertyBank Private Limited is a leading real estate investment advisory firm based in Singapore. Now, with that, Edith, welcome to the show.
Thank you for having me, Brian. Yeah, so I think to begin with, down in Singapore here, we sometimes commonly say commercial and industrial because of the very fact that commercial does covers retail. So this is just to keep the context of it because we have very stringent URA regulations here in Singapore. So we'll refer them to commercial and industrial properties.
Sure, fantastic. Now, Edith, for a start, give us an overview of PropertyBank itself, what you do, what sort of deals you focus on in the commercial and industrial space.
Okay, so Brian, to start off, PropertyBank is already 14 years old this year. So I think next year we are looking forward to the golden 15, and we are definitely a teenager. So to answer your questions, we are very, very focused on serving the business community and the investors. So for the business communities would be basically helping them to secure offices, which will include both the Grade A office as well as the shop houses, and then also the industrial and the retail. So basically, the moment you think of getting some Singapore real estate, but for your business and for non-residential properties, we are the ones. And in terms of deals wise, it's been a very interesting 14 years because we started off, formerly I was from Knight Frank and also DTZ. So that was actually a very good foundation. So beginning of my career, we were starting and we got opportunities to help procure data centers, which was like unheard of in the early days.
And you had mentioned this prior to the interview that you were in the data center game in 2011. So that's really early on.
Very early. Yeah. When some of the government that we talk to, when we tell them about data center, data farm, it was completely new concept for them. We have to go and explain to them it's like a warehousing for data. And the infrastructure cost that's going to put it, because for some of these buildings, they are primarily on our JTC, which is Jurong Town Corporation land, which is like a government land. In a way, you lease the land, you build the building. And it must make economic sense, for the tenure that's there. And then because of this very early head start that we have, we are kind of quite connected with the technology kind of companies that's coming into Singapore. So since then on, of course, we do the typical deals like, sourcing for office and all that, but we're very excited to have been able to serve the tech companies, including the e-commerce companies when it's like, expansion in Singapore. They will start with a co-working space and then they overgrow, they took up like different spaces within so that was phase one, where they were actually very, very prudent in the cost. And then they are in industrial building. And when the next phase, as they grow, they actually have to be talent hunting. So then they say, hey, I need a much better office space. And on top of that, I need a warehouse that's customized and built for me. So all in all, back to your question, the kind of deals that we do is very much like journeying the businesses alongside with their growth journey.
Okay. Now, one of the key things that's happened besides the data center business, obviously the data center business has grown tremendously. In Singapore, there's been a moratorium on building data centers, although there's now talk that that's going to be relaxed. Another interesting phenomenon in your 14 years has also been the growth of and demand for shop houses.
Yes, indeed.
But particularly heritage shop houses. Walk us through some of the interesting insights, because the prices have obviously skyrocketed in the last few years?
I think that's something which we were like excited to tell you in terms of whether some of them will say, oh, I've lost opportunity because the prices are crazy. You know, it's no longer making sense and all that. I think it all boils down to how much you think you want to enter at the price. I will just quote one example, and it's a real case that we have done deal with. So that was last year, about middle of the year, June, July. We have this pair of friends who are very good friends with each other, and they decided that, hey, I could no longer afford my ABSD, which is additional buyer stamp duty for my residential. And they have long been thinking that shop houses are interesting, they are chill, and then they said that this is the only money that I have. I only have about 4 to 4.5 million, you know, after taking into consideration borrowings and all that. So they did they have a mortgage broker that they work with, so they know their finances very well. And we were like, oh, it's not easy to find. If you want to have a HDB shop house, that is actually HDB stands for Housing Development Board in Singapore, which is like a mixed, residential come commercial use shop house, that you'll probably be spending about 3-4 million. But for them, they want a freehold shop house and they want it low cost. So we did the deal last year, and the transacted price was 4.888 million. Okay, in Little India. And the seller was selling 3 shop houses. We sold the corner shop house. So they bought the corner shop house. And come this year in March, 2 other adjoining units, same seller, sold at 4.93 million. So shop houses at a corner lot is rare to find, good to have. So imagine the kind of paper gain they already have. All things being equal, sizing and all that, basically they would have already made a gain of, you know, if on paper it's already priced at 5.3, 5.5 million, that kind of mark, easily.
It is one of the key drivers, as you said, it's all the extra taxes that are tacked on to property purchases in Singapore, particularly by foreigners. Obviously, that's driven demand for shop houses, but also then lots of private equity, venture capital funds have actually invested in these shop houses in heritage areas, even though the yields are very low.
Pathetic. The yields are pathetic.
So are those merely trophy investments, or how do you see this market playing out, particularly in
2 segments that I will talk about? One, yes, they are trophy assets. Some buy for, you know, like, you know, you talk about watch, you know, you can have collector's item, you know, so those are the ones after the trophy assets. Another group is after the transformation. For the, you know, transform that shop house, which looks dilapidated, which looks run down, transform the shop house that has got lower rental because probably even, you know, somebody is housing some workers inside. Yeah. So they change it to a cafe concept, and they change also to, but that you need to put money in. So then that is actually a little bit like asset transformation and enhancement. And then we do serve some of these companies that will buy at a certain market price, and then they will just rejuvenate it, and then about maybe 3 years on, or they sell it. I mean, currently shop houses or commercial offices are not subject to any capital gains tax, but you know, they kind of like let it settle for like 3 years and then they sell it.
Okay, now we're in the second half of 2024 right now. Give us some key insights and on trends, particularly challenges and opportunities in Singapore's commercial and industrial property sector today.
Okay, the challenge, I will begin with the challenge first. The difficult part is still interest rates. And we are at a time where the interest regime is here to stay. And yes, there may be a little bit of adjustment, but we're never back to the 1% kind of interest. which I enjoy as an investor myself years ago when I bought also an office space. So that's that very not so good challenge. But I think Singapore has remained unscarred for the years, the COVID years. In fact, through the years, we see that, pretty much because we are land scarce, but at the same time, a little regulated, and we see a lot of foreigners liking Singapore. So let me also move to the opportunities part. So in that sense, to say that if today you are a foreigner and you have to pay the 60% ABSD, additional buyer stamp duty, if you buy your residential property. So I think going forward, the ultra rich, they will continue to buy, because it's just one of their many homes. But
Yes.
for some of the business owners, they see Singapore as another satellite location that they want to be with. They are not very sure. Some of them immediately have a business. Others will say that, look, I want to have a slice of cake in Singapore. And having a slice of cake in Singapore is none other than having a commercial or industrial property in Singapore. And there is absolutely no restrictions to foreigners to buy. So let me also, talk about a little trending itself. Tourist arrivals have been back to normal. And in fact, it's also kind of a very vibrant, sometimes as a Singaporean, when I get to like Chinatown or I get to some tourist attraction, I feel really very, very, vibrant city that we have. So with that, actually, in this couple of 2 to 3 years post-COVID, we also see a number of even China brands, international brands, retail brands coming to Singapore. So with that, actually, it brings a whole lot of value chain because when these people, okay, for example, Luckin Coffee, which is from China, they have like wildly expanded in Singapore. And
Yes.
with that, because I'm in this trade for a while and have been in business, I would say that whole bandwidth down or the ecosystem down is that sooner or later they will need a warehouse for the stores, for the coffee, and then Singapore has also brought in concerts. So I think a lot of initiatives that our Singapore government is doing creates opportunities, creates for you, whether you're Singaporean, non-Singaporean, if you look at the trends here in Singapore, except for the so-called tech companies who overtake the space, we see so we will dissect into two different markets. One is the corporate leasing market that is facing some challenge because the tech companies are like up and down. At certain times, they need to cut certain costs. And rental of space is the easiest to cut. So we do see shadow spaces in that. That's still the, I would say the challenge for the tenants who already in the contract. But on the other hand, it is good for new tech companies coming into Singapore. They have found the renovated spaces that other tech companies are giving up the space. And second point is on the investor market itself. I would say investor market, it continues to grow strong, like what Brian, you've mentioned about the institutional buyers. And there's also family offices. There's definitely the tycoons, even around our neighboring countries. I mean, we have seen like record high transacted prices at Suntec, by a Thai tycoon. So I would say that I remain more optimistic than feeling the challenges in here, Singapore.
Now, it's interesting in terms of the premium office space market, obviously, and you made a reference to that in terms of the tech companies, obviously downsizing. It's been a very clear sign there. With all those spaces, are they allowed to sublet the space? Is that what you're talking about in terms of then opportunities for new tech companies and all to come in? Because people are still coming and investing in Singapore.
Yes. I haven't done a study on the number of new companies registering in Singapore. Okay, those may not be like immediate. But back to your question again, I think Singapore is, in terms of the landlord-tenant contract, it is very, very tight. So by saying that it is very tight, a lot of some startups will say that never mind, I let the landlord have my space which is renovated. I let the landlord have my security deposit and I can walk away. No, you can get sued because for every landlord, it is what we call a fixed sum contract. And by saying so, because some of these landlords are listed companies, they reported, say you enter into a 3 years or even a 5 years contract, it is fixed that they will see their revenue for that X number of years, and the numbers are fixed because it could be year one this rate, year two, but generally we are talking about a fixed number that the landlord can foresee in their books. So back to your question on, so what happened? Then I think the sweet spot is for the new entrants to the market, these spaces are fully fitted. And we are talking about tenants, we call them the outgoing tenants, we then have to find replacement tenant. So like ourselves, we actually help, even like during COVID was a very, very stressful moment that they need to cut costs, cut the rent, keep the people. So we find a replacement tenant, and then with the replacement tenant, it doesn't mean that the outgoing tenant pays nothing. Sometimes, because of the fixed sum contract concept, this outgoing tenant will have to pay for the rent-free period, assuming the incoming tenant comes in and say that, "Hey, I don't like the rooms like that, I need to do minor renovation." Then this new incoming tenant cannot say take over from, it's like they sign a new contract with the landlord. The landlord will then sign a deed of surrender with the outgoing tenant. So it's very clean cut. And also, you say, oh, market, if it is slightly up, the outgoing tenant, can I profit from the rent? The answer is no, because you are also not a party to the contract. Yeah.
I see.
Mm.
Now, how about then, and that's premium office space, but how about the industrial space? What is your outlook for that in the rest of 2024, 2025?
Okay, for industrial space, in terms of so there's again different segments with that space. We have the logistic and warehouse space. We have what we call the high specification or business park space, and we also have the light industrial or the general industrial space, which is rather industrial in look, but it's for manufacturing purposes. So if I were to dissect into 3 different segments, the poor performing will be actually the business park or the high specification space, because they look like office. But today, most of the tenants, when they make a decision between going to a business park, which are only in certain locations in Singapore, versus them shrinking the footprint, because now with hybrid working, they can give back the better, that means they can have a better grade, so-called, they can even move from industrial to office, for that matter. Yeah, then you have the other segment, which is the light industrial or general industrial. The very fact is manufacturing activities are still ongoing there. So I would say it's quite similar as in it's not like so drastic up or downwards, but we also see companies that are not doing that well from office cascading to industrial, because then they can spend renovation dollars to make it look nice. Yeah.
Can I ask you then, and I'll use a specific example that would interest audience. Obviously, places like, and you talked about business parks, Changi Business Park is an example, which has, which was a darling for the banks and
for the IT companies as well.
Tech companies for many years, but then now has very substantial empty office space.
Correct.
Is that some of the, what is your observation, and do you think that sort of thing will continue?
Actually, precisely, that was the very moment that, first thing, because like what you said, it used to be a darling. I mean, in fact, so near to Changi Airport. I mean, we talk about, but right now with the high vacancy, I think it's a very specified location in the east. So because even though Singapore is very small, but it is like, if I'm in eastwards, why don't I move nearer to town? Moving to Paya Lebar. So for example, I can quote one real case. It's actually a Holland company that has been spending probably the past 3 terms of leasing in Changi Business Park. And then they decided that they changed from Business Park to along Beach Road. There are some very grade B office buildings. So the rental jump is from $3.50 to $4.50 in Changi Business Park, and they jump to a building that is probably 80% more expensive, around the $7 to mark. Yeah, the reason for them to do so is that they can shrink the footprint, and the rent
So they end up spending the same, but it's basically better office space closer to the CBD.
Correct, closer to town, and that also helped them to upgrade the branding of the company a little, because they are like, hey, now I'm in a town office, and for me to attract talents all over Singapore, it's much easier. So I think that's a challenge definitely for Changi Business Park. But here we are, as we have this, conversation, is also about in labor tight Singapore, in talent crunch Singapore. Basically, employers are thinking out of the box to also make sure that their office is being occupied. They have people in the office, while they have that hybrid working. They want the collaboration part. They want to see faces in the office. Yeah. So which means today, in the past, I would just say, okay, I have that number of workstations. For top leaders that we have interacted with in Singapore, when finding the office, they want the office to be even looking prettier. They want the office to have engagement. They want the people to even have their lunch in the office for the bonding. So, post-COVID, there's so much things to talk about, in terms of, we were talking about industrial back to office. So that back to also the industrial itself, warehouses remain very, very tight still. Yeah, it is, nobody is saying that I give up my warehouse space. Yeah. So for that matter, I think it's a very multifaceted market when we talk about industrial. So it's not just industrial. Yeah.
Edith, it's been a fascinating conversation. You've definitely updated me and the audience on the Singapore industrial and commercial office space, commercial space market. But before we leave, any final thoughts or key takeaways you'd like to leave the audience with?
Okay, I think for this Biztech Asia's audience, we are talking about diverse tech group of companies, and I think Singapore continues to be a bright spark to invest. I mean, be it currency, we still remains very strong in the currency. And I think the way I look at it is that our positioning as a very small red dot still offers much attraction, both to businesses and to investors. And further, I would like to say the sustainability trending in Singapore, such that, this is like a melting pot. If you have a slice of cake in Singapore, you're almost like being able to watch a very quick movie. And then after that, you bring back to your home country, or, there's a lot of cross, referencing. I think putting your flagpole in Singapore, I love to say that it is something that a lot of, top companies that we deal with, it is a must to put their stamp in Singapore.
Edith, thank you very much for taking your time to be on the show. It's been a pleasure.
Thank you so much, Brian.
Now, we've been speaking to Edith Tay. She's the Executive Director and Founder of Property Bank. I'm Brian Fernandez, and you've been watching and listening to Biztech's Property Show. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.
Thank you.